Hello and welcome to India Market Open. It's Tuesday morning and it looks like it's going to be a negative start for the street, but we'll take you through everything you need to know as you get off a trade. Good morning, guys.
Couldn't think of a more busy two-day or a 24-hour period. BOJ, FOMC, the works.
At least it's the central banks worldwide keeping us busy, not local news flow for a change.
I don't know. I suspect that local flow will still dominate at least Indian markets as far as that's concerned. But having said that, global market mood has at least turned positive yesterday. So you had a positive close, and Nvidia is the big story worldwide. I'm remembering the days when everyone used to wait for the Apple Steve Jobs presentation. Now it's all about the Nvidia CEO that everyone's watching right now. So let's quickly take you through what the global cues are this morning. US markets have snapped that selling streak, ended up. They've rebounded ahead of that Fed meet. The two-day Fed meet begins Tuesday, so tonight our time, and of course the outcome will be out on Thursday morning for us. So you've had a positive close down the Dow, Nasdaq and the S&P 500. Nvidia is the story of the day, story of the hour, because they've released a new chip that they've called the Blackwell. This is supposed to be the next generation chip and makes the standard one, which is already in great demand, seem like quite an old version of things. And you have the Nvidia CEO presenting that. The tech stocks also in focus because of a Bloomberg report that says Apple and Google are going to work together, and Google's AI Gemini is going to be used in iPhones. I just found that story fascinating.
Fascinating.
Yeah, about how, even competitors understand that they need to collaborate on something like AI. So both those stocks are in focus. But apart from all of that excitement, look at the bond.
Yeah, no, just one small, did you know, because I mean I didn't know obviously, but I looked at the tweet from Charlie Bilello, and it says that Apple has 6.3 times the revenue and 3.3 times the net income of Nvidia, but the market cap is just 1.2 times higher.
But who has the chip?
Yeah, I'm just saying it's been a crazy run for Nvidia.
It's crazy, and it's also telling you how the one who has the technology first can zoom ahead. It's fascinating times. Not so much for the 10-year. Where
fascinating times for the 10-year as well.
I think more concerned than anything else. So look at what's happening to the 10-year, inching up for about 4.38, 4.36. Yeah, 4.36% ahead of the Fed meet, and that is going to continue. Not great for the Brent prices and for crude either. So Iraq, Saudi Arabia both have said that they're going to go slow on production, on exports as well. They have to meet their OPEC plus targets. Russia oil supplies are also under concern. So you had the Brent closing in on even an 87 kind of a level. Asia is the other one to look out for. And just before we rolled on the show, we were talking about Bank of Japan and how important that would be or would not be. So we're waiting to hear from Bank of Japan whether they will raise rates this month or next. Will they, won't they, is the big question after 17 years. Asia stocks are not very positive thanks to that. Let's quickly look at the implied open and what the mood will be in India. And yeah, that's looking negative at this point, possibly about 79 points down. Quick look at fund flows before we get to the trade setup of the day and how the day really ended yesterday. So we are in this range bound kind of a situation. You had DIS selling FIS selling 2,051 crores, DIS 2,261 crores in purchases, but it has still been no clear direction, I would say.
100%. In fact, the only thing that stood out, and that's a part of the trade setup as well, the only thing that stood out the last 3-4 days is that this 21,900 has been tested now for 4 consecutive sessions. If you are thinking of the Nifty being on an uptrend, then it wouldn't go down to test those lows. So sadly, that is happening. If it gets broken, then who knows what happens, but until now, so 2 ways to look at it. Is the glass half full that it's testing and coming back, or is the glass half empty that it's constantly testing that? So that's the first piece. 4 consecutive sessions we've had 21,900 being tested. Now the max put OI is at 22,000. So does that become that crucial support for the day today? And if that gets taken out, do we swiftly move on to 21,900, 21,800? Now that remains the key point to monitor in the session today from a Nifty perspective. But as we know, the market is now shifted to beyond the Nifty. While we talk about the Nifty at large, the broader market's doing a lot behaving a lot differently than what the Nifty does. So that's to keep in mind. That the small caps did reasonably okay yesterday. And let's see if this week also they do a bit of a bounce back selectively relative to what they did last week. So I think that's the key focal point. Metals saw a whiff of hope yesterday, didn't they? I mean, with all that's happening in China. But most people that we spoke to a guest on the closing show yesterday as well. We spoke to Rakesh Arora a few days back as well. Most people shying away from taking positional bets on metals. Yes, trading plays could happen intraday a couple of days, but positional trades on metals, preempting what China will do, is something that is out of the equation. So be careful if you're making those positional long bets on metals, maybe fraught with a bit of risk because of the uncertainty around that. And I mean, frankly, everybody talking about how stock-specific bets more likely in the value zone, likely to be the order of the day. And we saw that yesterday, right? I mean, stocks like Anup Engineering, stocks like Divgi, a clutch of others which were in this heavy engineering space, providing value because of growth, had some massive moves in trade yesterday. So bet on value, don't try and bet on high-priced stocks. That seems to be the mantra, at least as far as dealing rooms are concerned.
Makes the list very, very short.
Very short.
I mean, it's a handful of stocks that still look great and are not in the price. But you know, we were discussing that Indian markets are struggling at 21,900. Niraj, if you look at it, there is really no positive trigger to go out and buy. In fact, when Siddharth Bhaiya had that conversation with you last week, the one conversation I had with him was, he said they're going out for a Far East specific fund. So my concern now is that anything that could potentially come into India is finding its way into markets like China. Better than expected growth, metals looking good, are factors, and of course, very, very cheap valuations make China now, I think, a strong competitor to potential inflows coming into India. And I think that is one reason why we're still not getting the piece of the pie as much as we're eyeing it. Or buying it.
I think that's also a factor of waiting for the elections to be over. That could also be one of the reasons. There is money waiting on the sidelines for this big event to get out of the way. That could be
which is what Aditya Suresh of Macquarie said, that in their meetings with the FIIs, the FIIs are saying we want the formal tick mark to be out of the way. Correct. So we know that there is a likely policy continuity, but we want it to be formally done before we put in the money.
But if that was the case in the last couple of election times, the post-election rally hasn't been significant.
Very likely.
It's buying the news and selling the rally, or buying the rumors, selling the news.
Yeah.
And that's been the texture of worldwide markets across asset classes, right? One could argue.
But the only difference, and I don't have, I don't know any of us have the data of what the FI behavior was preceding those elections, but preceding these elections, FIs haven't been putting in the money by the droves, so maybe, just maybe, hopefully that changes.
I mean, what I am hearing is that, while we've talked about this since October, is that China is looking very, very compelling. So if you are vying for flows coming in on back of value, and remember, valuation has always been a concern for foreigners, right? We're not at our historical highs, but we're still not a cheap market by a mile. And that's, of course, DIs have limited options in terms of buying what is available. You really don't have much of a choice beyond your home market. But for global investors, India, China is an outside and foreign market. So this is just one piece, which probably means that there's no big trigger at this point to help the markets go up. But nevertheless, 22,200 on the upside is also proving to be a quite level of resistance. While you've seen a little bit of recovery across the broader markets, they've still underperformed the benchmark in yesterday's day of trade. GIFT Nifty indicating to flat to lower start, so not too much fireworks expected. It's going to be the stock-specific trade, like Niraj said, and rotational buying that the markets are currently witnessing that may continue into today's trade as well. Let's quickly highlight a few stocks that are in focus. OMCs will be in focus this morning. Remember, crude is inching higher again. Exports coming from Saudi and Iraq have reduced. There are early signs of an increase in demand. All that is keeping oil prices elevated. Not good news coming in for OMCs, which already are dealing with the fuel price cut that took place last week. So these counters, once again, could be on the sell tab for a lot of traders. Apart from that, Tata's group companies haven't stopped grabbing our attention for the last couple of weeks. And this morning, too, it's no different. It is TCS that's in focus. Not too much in terms of a stock reaction. Of course, you will get a gap down in the early hours of trade, but the story here is that Tata Sons is looking to sell 2.3 crore shares at the price of 4,001 rupees a share, while a block deal in TCS, they're looking to raise close to 9,000 odd crores. This amount that is going to be raised will be used to par debt that Tata Sons has on its books. Remember, the Tata Group stocks have been in focus in March after there was a note which Spark Capital sparked about a possible listing of Tata Sons by September 2025, as it will complete 3 years of being notified as an upper layer NBFC by the RBI. So all these things that Tata Sons is doing is actually part of the course to avoid that listing and not to remain an upper layer NBFC that would be required to be listed by the regulator. Tata Steel is well in focus. This one is good news in some ways. They are looking to stop operations of coke ovens at Port Talbot in Wales. After there's been a deterioration of operational stability, they will increase their import of coke to offset the impact of coke plant closures. Now remember, this is part of their restructuring plan. This plant of theirs in Wales has been losing £1 million daily is what they've indicated, and that could also lead to a further £600 million loss. So all part of restructuring. They're moving to better and more efficient green energy, and hence this could be another big positive because they finally pulled the plug on this plant and are in talks with unions in the UK to ease the situation there. Well, this is a statutory requirement coming from Aditya Birla Sun Life AMC, where the promoters are looking to reduce their stake. This would be done through an OFS. The floor price of this comes in at a discount. Remember, the promoters cannot hold over 25% in the entity, on back of which you will see this. The stock will react negatively, but again, a regulatory requirement, so not too much in terms of a reason for that reaction. So those are the three big ones. In that sense, Tata, of course, grabbing highlights this morning.
Yeah, most certainly. And you know, just thinking that if this is coming out, then do the resultant beneficiaries like Tata Chemicals, etc. also
still gain again?
No, come down today, right? Yeah. Because if the Tata Sons IPO is getting postponed,
it was. I think we're done with that. 40% gain, 25% correction. I think the market has moved on.
My question is, will they sell in other group stocks as well, or is it only Tata Steel? Is this just the beginning of a larger picture?
Actually, so I did discuss that with Vishin. I think he's going to talk about that. But they hold stake in 700 companies. It's going to be a tough one to go out there.
Also, the quantum of money that they need to pay.
And I don't know how much debt they have on the books.
At least I don't know. Yeah, but I'm just watching out for Tata Chem. Let's see if there is a resultant impact. Very quickly, a couple of stocks that I wanted to highlight before Tamanna brings in. You know, we're talking about what IT is doing, etc. and stuff like that. And while TCS is saying what it is doing, Citi has this note wherein they have had a conversation with the Mphasis CFO. And the Mphasis CFO is saying, this one line is crucial, the Mphasis CFO is saying that there is no change in the demand environment since the start of the quarter. So much as we're talking about whether there are conversations or demand picking up, the Mphasis CFO is saying there is no change in the demand environment. They're saying that growth in quarter four will be likely better beyond the benefit of the reversal from the furloughs, of course, led by BFS, but no change per se. Margins will remain in the guided range. So thus far, there's no reason to be extremely bullish on tech, thinking that demand environment is changing. It is not.
Not until the elections are the way in the US too.
Maybe, or the rates. Yeah. So you may be right, but I'm just saying that as of now, there's no evidence. So any kind of upticks in IT, Pied Piper stories, part one. Part two, Poonawalla FinCorp is very interesting development out here for multiple reasons. One, HDFC Bank veteran Arvind Kapil, new MD CEO, great for Poonawalla FinCorp, right? Good face coming in, etc. and stuff like that. Is it a big negative for HDFC Bank? That's the question. So Jeffries is saying that the development is tad negative for HDFC Bank as well as Bajaj Finance, because Poonawalla FinCorp, according to them, is one of the closest competitors to Bajaj Finance. And if they are getting a veteran, then it may impact Bajaj Finance as well. So it could be interesting. They are also eyeing, watching out for any exits from Kotak. So that was the other interesting bit. I don't know why, but
no, so the thing with the HDFC personnel who's coming, Kapil, he was heading their entire retail play, which is so he's an important cog in the wheel. Big dependence on him, and there's more HDFC notes out today, which we will get to. But that's definitely.
So Nomura is saying that they are not too worried because HDFC Bank has depth, and also it's one opinion versus the other. But it is very interesting for Poonawalla FinCorp per se, and also for the allied places like Bajaj Finance and some others.
You know, talking about HDFC Bank, and this is what I've been hearing, and I think we talked about this as well. The second rung management at HDFC Bank is going through a massive churn. So the head of private banking had recently moved on to corporate. There were churns from the NRI team that have moved to private. So if you look at it, I mean, all of course we hear about is the top level changes, but the management, the bank itself is going through a serious rejig at level 2, which is really the guys who get stuff done, right?
That's interesting. Yeah, those are the cogs in the wheel.
Yeah, just very quickly, sorry, just before Tamanna goes it, and the last set of stocks, just we should keep an eye out for. Coforge yesterday was very interesting, the price movement. So just the price volume action that we've seen. Coforge was down 7% because of this block deal, QIP, and whether there is some M&A activity out there, that's the rumor mill on the street. 3.5 times their delivery volumes. But the others, 3 small names, very interesting price volume action on your screen. Hindware Home, 9.5% higher on 9 times 1 month average delivery volumes. Spark and Network 18, which went up 4% on 15 times the delivery volumes. So very interesting mid-size small cap names in focus today.
Yeah. So just since we're talking about financials, L&T Finance was another one that I wanted to put on your radar. Their board approved a fundraise via non-convertible debentures yesterday. And the upper cap that they've set is quite an astonishing one of 1 lakh crore rupees. So one way to look at it also is how, all of these players are padding up for a big war within that financial space with the competition heating up. So L&T Finance is one I'd watch out for. HG Infra is the other one. There has been more news coming in recently about order flows, but as such, relative in the infra space, the stock has not performed too well. In a year, up about 16%. In a month, in 6 months, down about 7%. But the latest is that they have got a clutch of orders, 4 LOAs actually for solar projects from Stockwell Solar Services, and the aggregate value is about 1,026. So if you look at it versus their order book of 9,600 odd crores, so not too bad. So HG Infra is the other one. JSW Steel I found interesting because the company has issued a clarification that they did not make political contributions to the JDS, that's the Janata Dal Secular, in electoral bonds. And this is going to be one overhang on the market as well. You saw yesterday Biocon's chief come out and explain that she donated in her personal capacity. Now JSW Steel is saying that we did not contribute to JDS via electoral bonds. The JDS data with the Election Commission said they did. Now was it as a company, was it not JSW Steel, remains to be seen. But I just want to also put out this one quote when Kiran Mazumdar-Shaw spoke with us exclusively, in fact, and it reflects the kind of concern that corporates have over this whole electoral bond situation. It's going to peak on Thursday because now the Supreme Court has directed that SBI should put out the alphanumeric details which would allow anyone to match donor to recipient from the political parties. And she says, we should not give up on electoral bonds as conceptually it was aimed to bring in white money into election funding. We need electoral bonds version 2 that strikes the right balance of confidentiality and disclosure. So this might be an overhang that you could see in the market as well.
It is. Electoral bonds are leaving us anytime soon from the look of it. But very quickly, 2 listings. You've got Shipping Corporation of India Land and Assets. It's the demerged non-core entity of state-run Shipping Corporation of India. It will be debuting on the exchanges. It is only for trade-to-trade segment. No buy today, sell tomorrow trades would be allowed. This one's important to watch out for the stock. In fact, SCI was one of your big gainers in yesterday's trade on back of this listing. The other thing you want to keep in mind is that this was part of the government's initiative to disinvest a chunk of those non-core assets. Well, as per the Shipping Corporation's 2023 report, the value of these non-core assets stood at 2,392 crores. So this one is important. It'll be exciting to see how SCI, whether it continues a positive up move on back of that today as well. You've also got Popular Vehicles and Services. They will be debuting on the exchanges at 10 a.m. The final price has been fixed at 295 rupees a share. There's not too much of a premium on this one, the grey market this morning, Tamanna.
I'm feeling bad for those who are debuting now.
I know, right?
It just 4 or 5 months ago.
This is just luck.
The mood has just changed.
So you're lucky if you list flat.
Yeah, if you made it. Just a couple of stocks before I go over to Alex and editor's cut. Signature Global is one you may want to keep on your radar. They've completed an acquisition of 100% stake in the Gurugram Commercity Private. It's now a wholly owned subsidiary effective today. Real estate has been taking a bit of a knock, so Signature Global is one you could see. I picked Veritas because I just found this whole concept of this project they've got very interesting. They've got an LOA from BMC for 156 crores, and what they're going to make is a 3D model of Mumbai city, which the BMC is going to use to make decisions of how to run this city, and I just thought that was pretty cool. So which is why. Page Industries is another one because there was another brokerage house which initiated a buy rating on it today. Citi has a sell rating today and says the demand environment will remain subdued. The new customer acquisition in men's innerwear also remained subdued. So this company which owns the Jockey brand may see some concerns.